But you made the case, the same case that the legendary one and only Hal Finney made many, many years ago when Bitcoin was worth fractions of a fraction of a fraction of a fraction of what it is today. But you still made the case 14 years later that Bitcoin could potentially be a $10 million asset. And the case that you make is that it will take about 25% of the world's wealth. But I hear that number and I feel like it's a big number. And I'm really curious to hear Steven's thoughts on this as well. So start off with you, Jesse. What inspired you to write that article and what made you so confident about it?
Yeah, awesome. So I'm before Bitcoin, I was a management consultant. And a big part of that is developing the analytical toolkit to go into a problem where it's not clear what the answer is, and try to triangulate a reasonable estimate of what an answer is. And so when you're doing that for large businesses, that looks like coming in and to a business unit and they're asking, what's our potential profit if we were to spin up in Asia, start competing there. Don't know. And then you go about trying to figure out reasonable estimates to get some ballpark number. So that's how I think about problems like this. And that's where my brain went immediately when I fell down the Bitcoin rabbit hole of trying to size the opportunity here. And, in the business world, in the consulting world, you talk about full potential. What's the full potential of this product, of this business unit, of our profitability? What's the max? What's the ceiling on what's possible here? And so I wanted to do that. And, I was aware of Hal's numbers. And of course, we're all aware of the various huge numbers that people have thrown out over the years about, Bitcoin. There's the stock to flow model of Plan B's handle is 100 trillion, which implies a $5 million per Bitcoin. And then I think he got more bullish than that. So he kind of went even bigger. There's people who have said in the past $100 million per Bitcoin. But there hasn't been like analytical rigor around that. And so I wanted to put some flesh on Hal's idea, really, of what is the role of this asset in the global asset landscape. How big is that total addressable market? First of all, turns out when you tally up all of the assets out there, there's $900 trillion of assets in the world spread between your various asset buckets like real estate, stocks, bonds, money itself. And Bitcoin is this tiny, tiny little bit. 400 billion in this right now. It's, I guess, closer to the 600 billion, but 0.05%, 1/2000th of the world's assets is Bitcoin. And obviously, I believe, and Bitcoiners believe, that because of its superior properties as a store of value asset, as digital gold for the digital age, that 0.05% is going to grow. It's going to take some of the value stored in these other traditional buckets of analog, physical store of value assets like real estate or like bonds, and siphon that value away. Because every day, anyone who's looking at their portfolio and they see, I've got 25% in bonds, do I want to hold that? Since we're going into an era of increasing money printing, I believe that bonds will deliver negative real returns over the next decade. And I'd rather own something that's going to deliver a positive return. And I believe because of Bitcoin's properties of increasing scarcity, it will do that. It will be like gold from the 70s with this added rocket fuel of increasing scarcity. Gold in the 70s had a 14x during the stagflation of the 70s because stocks underperformed and everybody wanted hard assets rather than keeping their money in dollars and eating it on inflation. So gold 14x in the 70s. I think Bitcoin could do that and some this decade. And so this whole analysis was to take stock of how early it is still for Bitcoin's position in the global asset landscape, and then put some analytical rigor around where's the ceiling? What percentage of all the assets out there could Bitcoin siphon away over the coming decades? And the answer I came out with was, I think it can reach 25% of all the assets in the world by siphoning away, by causing people to choose, I'd rather not hold bonds. I'm going to sell these bonds and I'm going to buy Bitcoin instead. And that individual decision goes on every day all over the world for everyone. And incrementally, Bitcoin eats more and more of the world's store of value assets. So that would mean going from a 0.05% of the world's assets to 25% of the world's assets would mean a 500x in real terms, inflation adjusted terms, over the coming decades. And I think that's the full potential for what Bitcoin can do.
Yeah, and Steven, pass it on to you as the head of Swan Private. Do you agree with this? Do you agree with this with Jesse's thesis, which is originally Howe's original idea, right? Is how may he rest in peace. He obviously didn't go in depth, right? He broke it down, on a much higher level, like on a much, I don't know what the proper terminology is, but it was more simplistic in the way that he described it. And the reason is simple. Bitcoin wasn't even didn't even have value back then, right? So it was just a thought experiment the way that he approached it. But, Steven, pass it on to you. What are your thoughts on this? When you hear these numbers, do they sound absurd? Like, what is your thinking? Is this something that you bring up to your clients? Because one of the talking points that I always hear is like, Nico, I'm too late to Bitcoin. Look at Doge. I can get it for 10 cents on. I don't even know what the price of Doge is, but you guys get my point, right? Absolutely. So, Steven, do you hear this often?
Yeah. So, I actually really agree with the way of looking at it that Jesse is saying. I've said it kind of in a much simpler way to clients many times. And it's like, do you think it's at all likely that in the future, 2% of people's wealth around the globe might be stored in Bitcoin? Most people, it's like, yeah, that seems reasonable. 1%, 2%. Well, then the price should be substantially higher than here.
That would be a 40x. Yeah.
So that's really simple. Like, could it get to 25, 20? Could it get to 30? I don't even really try to speculate that far out. But do we think there's a high probability that a couple percent of the world's wealth could end up in Bitcoin over the next decade? Absolutely. And we've done some work on that. So two things. One, it's actually really interesting. I don't have this chart and you may have trouble finding it. So it's a tricky one. But the percentage that gold's market cap was in 1970, or at the peak of that move, of US assets. And I don't have the number off the top of my head, but if you look this up, it was substantial. It was double-digit percentages, I believe, that gold actually represented a huge slice of all US asset value. And so saying, could Bitcoin be 20% of assets? I think that, that actually is a return to what monetary and asset dynamics looked like, a few decades ago. So is that possible? Of course that's possible, right?
Yeah.
Will it happen? What timeline? Who knows? But so that's one thing. And then the other thing is we've actually also been doing some work on this with NakamotoPortfolio.com. So our CIO, Hafa, Alpha Zeta on Twitter, he's built this incredible analytics tool. And with that, you can basically plug in all the asset classes, stocks, real estate, bonds. You can say, what percentage do you think of it is monetary premium? AKA, people are only buying these things because they don't have a store of value. They don't have something else to hold. And you can kind of run some calculations and you're going to come to similar numbers, depending on what assumptions you plug in. Oh, yeah. And you found this. What was it? It was, okay, so it was 5% of global financial assets. And then, yeah, so it'd be a higher number of US.
Yeah, I think the Peter Thiel put out the slide of in 1980, the total value of all the gold in the world was $2.5 trillion. And all of the equities in the world, all the stocks, was $2.5 trillion. So we were at parity at the end of the stagflation from the 70s, and obviously since then stocks have grown to 115 trillion and gold has grown to 12 trillion. So 10x outperformance by stocks during this 40-year period of decreasing interest rates and fiat, which I think is set to reverse, and commodities will be the winner this coming decade.
And let me jump in right there with a quick comment, because this might not be on listeners' minds, but one of the arguments that people make frequently is like, oh, if you had like a hard money taking up so much of this value, wouldn't it cripple economic growth? Like, wouldn't that just totally impair everything? 1970s, like, you know, I mean, obviously there was some economics that like stagflation in that particular era, but that gold relationship had been going on for some time. That wasn't like novel. So you had kind of the US economy from, you know, the early 1900s through, you know, more recently, you had gold as a store of value asset taking up a much more significant slice of all assets. And that was an extremely dynamic period, not just looking at GDP, but because I would honestly, like, you can look at GDP and the same argument is still kind of made there and you can see it. But I would even say that the dynamism of that period is more fundamental than what is captured in those GDP metrics, because, you know, you can kind of convert anything into data. But what was really unique about that, you know, mid to late 1900s in America is you saw these huge real world actual strides in technology and living standards, and like people's actual lives change. It wasn't just like trade balances and the velocity of money.